Hello everyone. Good evening. So just let me know if you can see my screen as well as hear my voice. You can type. I think chat is enabled. Okay. Okay. Fine. Yeah. So okay. So let's give 1 or 2 minutes for somebody else if somebody is joining. So I schedule this meeting only for members because I want to talk about something which will help uh, to take better intraday trades. Uh, 1 second, let me see. Festival here, I am unable to continue. You can provide the recording. Yeah. Recording, sure. I will provide. Yeah, that's not a problem. Okay, just I want to have this meeting so that based on my analysis, you can take a more emotionless trade uh, in the live market, and that is important because in live market, uh, uh, very important to control emotions. It's very important. Uh, I think another person joined. Yeah. I'm not, these are just some old counts which I put, so I will just delete. Okay. Yeah, so today I wanted to discuss like what's an impulse and what's a correction. So as many people might be knowing what is an impulse and correction, but I want to basically discuss how we can not get trapped and how to use divergence and all those things, and basically what is an indicator. And I will keep this meeting short, 30 minutes, but it should have a lot of information which you may not find in any book because my this is only my observation. So yeah, so impulse is a sharp move, simple as that. Sharp price moving impulse, these are the corrections, small corrections. Now how Nifty is moving is, we had so many impulses, this impulse, this you can call it impulse or not, but this is again an impulse, and these are the corrections. You may say that okay, now the price has moved and it is very easy to say what is a correction impulse, but in all these moves I had predicted beforehand that there will be a correction, right? Maybe this I was only not able to predict, but apart from that, this correction also. So most of the corrections able to predict. Okay, so there is one thing here. When impulse is happening, then many people who are on the other side get stop loss hit. Suppose somebody was bearish here, thinking that oh, price was coming down for so many days, it should again come down by the simple logic. Somebody not able to hear the. Is my audio audible to everybody? Please let me know in the chat. Yes, I think whoever not able to hear the audio should just check the settings, audio settings, microphone, speaker, sorry. Yeah. So basically, whoever was trapped here got stop loss hit. But stop loss, yes, first time. Okay, fine. Yeah, you can check. Yeah, you can check your settings. So basically, stop loss hit means stop loss anyway will be hit if you are wrong. But that is not the point. The point is, impulse creates a fear within you because price starts move so suddenly. in your opposite direction when your stop loss hits. Suppose you are thinking it will go down, and stop loss is not only hit, but it is hit in a bad way, and all your confidence in the market gets lost. Whoever was thinking market will fall here, many people were thinking actually, because people are like, if there is a 100-point fall in the market, all analysts will say market will now go to 6,000. If there is a 100-point up in the market, everybody will say it is go to 9,000. That is the only thing people know. So when your stop loss gets hit, impulse creates a fear. It takes away all your confidence. Okay, means so impulse, we have to trade the impulse. We should never trade the correction. Okay. Of course, that does not mean, suppose I will tell you this market of 2015, like we had a big correction. It's not, I'm not saying you don't trade that. What I'm saying is, in correction also there will be small impulses. Those things we can trade. Okay, and impulse is not like prices only moving up. Impulse does also mean prices falling down rapidly. So wherever there is a sharp movement, that is called impulse. Okay, where there is a sharp movement, there is an impulse. Prices move very fast, and we should never, means to find out the direction of the market, we should know the top and the bottom, and we should never fall in trap of trading the correction. Okay, so my analysis should help you in knowing the top and the bottom. Okay, even if you have missed one impulse, that's okay, but you should never ever trade a correction. If you are trading correction, you are thinking that, okay, I will short this, I will make such a amazing call, I will find the top and I will find the bottom and I will trade this. Of course we found out, I said this bottom 8227 possibility of bounce, exact bottom, right? Those who are following Privolti will know that exact bottom was predicted 8227, not 1 point here, not 1 point there. But what I'm saying is, still I never said you short here, and neither did I say short here, neither did I say short here. All these points were predicted in advance, but I did not say short because this is a correction. I also said that we are eventually moving up. Did I buy here? Did I buy here? Maybe not, but that's okay. If in a big impulse you are able to trade only a small portion of the impulse, that's okay, because you buy here, immediately after taking position your portfolio is in green, means your trade is in green. There is no bigger satisfaction than that, right? Immediately you take it, it's green. If you are thinking of extreme, means you are going to trade the top and the bottom all the time. Top and bottom, as I said, is important. We need to know the top and bottom, but to be as experienced traders, mature traders, we don't need to necessarily trade the top and bottom all the time. You trade a small portion of the impulse, that's more than okay. Okay, so we should never trade the correction. Okay, how we know it's a correction? The correction happens when prices are moving relatively slower than the previous movement. Okay, everything is relative. So let me show you. Suppose someday a big correction happens. Suppose let me draw a big correction, like correction of 2015. I think I remember the chart so well. I have seen it like million times, like this, and it started going up and then like this, and boom again, and like this, and again boom, like that, right? Oh, sorry. Yeah. So this was the whole of 2015. Okay. This chart has come a little bit here. Okay. Yeah. So this was so when this correction started, that correction is always in respect to the previous move, always relative. Now in this correction also, right, you will find one correction here, one impulse here, one correction here. I will show you in the real chart, possibly in the 1 minute chart. One second. How do I make it small? Where is my 2015? Okay, 2015, right? 2015 correction. Okay, so let me remove all these things. Correction happened because prices were moving sharp. Here impulse, correction, small correction, again a impulse, Okay, this you can say is a corrective zone. And then again a impulse, clear moves. This is again a correction. This is again a impulse. Now, when the top is formed, okay, whether you are able to predict the top or not, that is not the thing. When price starts falling, you can find that the speed with which it was moving, these impulses, that is missing in this whole move. Whole move, it is gone. Okay, but in this also there is impulse, and again there is a correction. There is impulse. There is a correction. There is impulse. There is a correction. Okay, again a sharp impulse. Again a correction. And these are nothing but Elliott like waves. These are nothing but waves. But I am just giving you an idea. The psychology, right? Psychology is very important in trading. Like, even if you know each of the, nobody knows each and top and bottom. It is impossible. Okay, whoever is in the market for several years know that no analyst in the world can predict the top and bottom. They may say big things. I will do this thing for you. I will do the, but nobody is finally able to predict the top and bottom. So for the safe thing is, right, even if you have a vague idea of the top, like you have a vague idea here market can fall, need not sell at the top. When you see a confirmation, you trade half of that move. This much move is okay to give you decent profits, provided you don't trade the correction. So correction, and so I want, like, whoever is willing to spend some time. I'm not even saying you should start learning Elliott wave immediately. What I'm saying is just observe any chart after this webinar and try to identify a correction and impulse. Impulse, correction, impulse, correction. So whenever you see impulse, right, the next move, if it is going, suppose that the move which you saw is a impulse and it's coming down, is it coming, speed is lower, the choppiness is there in this move relative to the previous move? If it is, then it's a correction, and the previous one was an impulse. Impulse can be up and down, that's fine, but speed and choppiness nature, is very important. So what I would say is, like, after this webinar, whenever you have a time, go back to any of the chart, not only Nifty, of any chart, and keep try to figure out an impulse and a correction. Okay, correction is the slowing of the prices. Prices will be slowing down. Okay, so here we can see again an impulse and a correction. Whoever shorted here is gone because price moved sharply again. Whoever shorted here is gone. So a patient trader, I many times write in the this I write in the messages, a patient trader. What is a patient trader? A patient trader waits for the impulse. He doesn't trade the correction. Okay, if a correction is very huge like 2015, then of course he has to trade the impulse within that correction relative to the other waves in the correction 2015. Let's say we have to trade the, this is a correction actually, because eventually prices will move up, but in this correction also there was a strong impulse, so we need to trade that. So one should always keep comparing the previous move to the current move to the previous move to know what is the. Okay, somebody wrote something. Can we come to that also will be in a trending market, or others trending market will produce any? Can we conclude that all impulse will be in a trending market, or otherwise will produce an impulse? Okay, now it is very easy to actually say after the move has happened, right? Anybody can say and explain whatever, this is a trending market or this is a trending market or something. But in a trending market, okay, there will be, no, actually I didn't get the question. Can we conclude that all impulse will be in a trending market or otherwise? Means, are you asking like, will a trending market have an impulse? So basically, what is a trend? First of all, we need to define, means a trend. What is yeah, I think I got you. So yeah, trend. Now the everybody says the trend is a friend, but trend is a friend, but the moment it stops becoming a trend, it becomes your enemy. Like, it was a trend here and then it became your enemy here, right? It fell down and became another trend, another, the bearish people's friend it became. No, what I'm trying to say is that just let me check what is, yeah. So what I'm trying to say is, in a trending market, so-called trending market, impulse, of course, in 2016 March, February ending, we saw a trending market. In that, there were several impulse. Okay, 2015 was not a trending market, many people will say, or some people will say that from October it was a trending market in the downwards direction. So so what I want to basically say is that to learn, to learn or master the Elliott wave, the first thing we need to check is the comparison between this current move versus the past move. Okay, this should give us the direction that we are in a corrective phase or impulse. Impulse is going up and correction was coming down a price. No, it's not like that. Impulse in a falling market, okay, in a falling market, impulse can be down. For example, 2015, it was coming down. Now I drew so many things. Let me clear everything. Oh, one second. Remove all indicators and drawing. Yeah. Okay, now I will show you the simple thing. If you consider impulse, what I'm trying to say in this one is, impulse and correction is always relative to each other. For example, if you see this whole picture, right, Nifty was trending up, it was trending up, it was a major impulse, and this was a correction. 2015 was a correction. But if you zoom into 2015, you will find that the last portion of 2015, or even some portion of the middle, was a impulse actually. So impulse can have down also. Now we have a healthy economy, that's why prices are continue to go up, and we can say that, like what we can say is, the impulse overall trend of Nifty is up, means any up move is an impulse, and but not necessarily. We cannot discuss technical analysis only for Nifty, right? In general, uh, this definition is not true, that if I say that okay, impulse is always up in a falling market. Okay, let's say, I remember, like what is that bank? I think Union Bank. Union Bank. Yeah. Why I choose that Union Bank? Yeah, it was falling, correct. Okay, I remember its chart. Yeah. See, if we see this chart, then its impulse is down, right? This is a whole down, and all the up moves are actually correction in the overall picture. But into this zone again, there is impulse and correction, impulse and correction. There's nothing but waves. But why I'm trying to say all these things is, even if tomorrow you want to become a Elliott wave expert, this is very important. Always compare the current move with the previous move. Okay, not the current move with the current move of any other chart. Current move with the previous move. Okay, so like this was an impulse falling down. All the down moves in Union Bank are like impulse. This is impulse. This may look like an impulse, but in the overall direction of this one, right, this is again a correction, because again it is going down. But if you compare here, for example, here maybe there is a bottom here. I have not analyzed its waves to suggest you to buy or sell, but what I'm saying is, in the overall picture, this each move, right, if you see each move, for example, this move, the nature of this move and the nature of this whole move is choppy. This move is choppy in nature, but inside again there is a impulse. So maybe this is not a good example. Let me show you. For example, this portion, this is a smooth impulse, and this is a choppy correction. Okay, again you saw this fall, so smooth, this fall happened, this is the impulse. So impulse is always followed by a correction, but there is one exception. What is the exception? The exception is, again in Elliott wave terminology, let me draw Elliott waves. Okay, 1 2 3 4 5. Okay, 5 waves, simple. This is the impulse. This first wave is impulse, this is a correction, This is impulse, this is a correction. So whenever this is happening, again impulse. So whenever this is happening, you can follow my simple rules that compare this move with the previous move, with this move. This move is fast looking, sharp, this is choppy and slow, so this is a correction. Okay, fine. Now impulse is always followed by a correction, except this, after this fifth move there will be a big correction. Sometimes it is so big it looks like impulse. So after the end of the fifth wave, right, this thing becomes, this is also impulse, this is also impulse. Okay, except this end of 5 waves, right, except this situation, everything is alternative in nature. Impulse, correction, impulse, correction, impulse, then a correction, but it is so big it looks like impulse. Okay, let me see what is smooth is impulse and choppy is correction. Yeah, and smooth and also fast moving, with respect to time, price moving very fast, this is impulse. Okay, this the impulse can happen both up and down, correction can happen both up and down. So what I'm saying is this alternative nature will end at the, only one exception, at the end of 5 waves, right, this will become a big correction. And if you just see by the face value, maybe this will look like impulse and this will also look like impulse. So at the top you may see things like that, impulse happening, impulse again happening. So many times I'm not sure this chart is there. For example, this right, smooth coming, maybe it is the end of 5 waves. I am not suggesting you to buy yourself. What I'm saying is this is smooth waves, this is again another smooth waves. So most likely this is end of 5 waves. But this is, of course, this is not the only thing, but this is the basics. So yeah, so impulse followed by correction, exception end of 5 waves. So I wanted to share this information so that which you, okay. Another thing what I wanted to share is that when a correction happens, right, when a correction happens, prices move slowly. Okay, let me take a moment here to see if my screen is visible, is if my voice is clear. Clear, okay. Okay, in this so far, any questions, any doubts? Those who already know may think it's simple, but maximum people lose money on this one only, impulse and correction. Okay, so basically when the correction is happening, okay, doubt is how to 5, which is wave 5. Okay, see, as I told you, right, that it is Elliott wave is highly complicated in nature. Okay, Elliott wave is highly complicated. If you read any book, that is good, but after reading the book, when you look at the chart, you will find nothing is working. So you have to what do you call, you have to do lot of if you want to become a Elliott wave expert, you have to look into hundreds of charts and try to figure it out yourself. Okay, it is not so simple. Somebody will tell you I will teach Elliott waves, and they themselves have no idea where tomorrow Nifty is going, and they keep saying. So what I'm saying is Elliott waves, if you have to master where the end of 5 waves, the whole world is thinking actually where is the end of 5 waves. Everybody thinks the 5 waves is completed or something at every point of time. So it is, first of all, you have to lower your expectation. It is not so easy. It is not so easy. But what I can say is, if you see my calls, most of them are top and bottom. So you should be aware that this is possible to predict at least. But if you think you will be able to master it in 1 week, 2 week, or 1 month, 2 months, that is not going to happen. You have to get idea of the Elliott waves through that RN Elliott book, because all other books are like copy paste from that book, and you have to study it very, very seriously, and you have to use my guidelines of impulse correction. Even Elliott said the same thing, but I'm trying to explain from my experience. As you sent a Nifty wave, still was still 8457. No, I've changed the counts, right? I have changed the counts. If you see the latest counts, that's looking different, right? That was one old chart you are referring to, 8457. By the way, 8443, this level was predicted on December 30th. If you scroll up to see the messages sent on December 30th, this level where Nifty fell yesterday, that was predicted on December 30th, right? I think who were in this group would see that message. Even if you have not seen, you can go back and see that message I had sent on December 30th. I think some people would agree or have seen that message on December 30th. That 8443, December 30th, here somewhere around here, see, December 30th, I predicted that this was an important level, 8443. Where is my 8443? So this level was predicted long back. I'm not saying here, I had predicted this level on December 30th, that we are going to see a correction here. But does it mean end of 5 waves? That I have already updated my counts, and I will be keep updating on. So don't think about what will be the count tomorrow. You leave that to me. I will analyze and I will give you an update. That's why this subscription whole thing, because it is not so easy, right? Every moment can change. It can look like this. If you're thinking somebody in the world is like a person who can predict something and it will be true after 1 year, 2 year, that thing does not exist. So but what I'm trying to say is, if you have the expectation, correct idea of basic thing like what is the impulse, what is the correction, how to understand Elliott waves. Okay, in the books what they will do is, right, they will pick some charts, they will look for some charts which are looking good for them to explain. Okay, they will find from hundreds of charts one chart which is looking good. Okay, using that knowledge you can trade only that chart only. You cannot trade anything else, right? If you open any Elliott wave book, even R.N. Elliott's book, how many waves, how many charts he has put? Hardly few. And why he has put those only? Because out of hundreds and thousands of charts, only he has found a few charts which are looking like Elliott waves are there, and he has posted those. When you come to live market, everything becomes very confusing. But since I am able to predict the top and bottom almost every time, so you should be on the confidence that yes, it is possible to predict. But there are a lot of factors in the market. Constantly waves are forming, and for you that you don't face a huge loss at any point of time, and most of the time you are in green. That's why we have to constantly keep evaluating the waves. Okay. So if you see this move also, right, this move looks like impulsive in nature. This looks impulsive. This is a corrective move. Okay, whether this will go up or down, that you will come to know every day on my updates. This is an impulsive move. This is a corrective move. Again, this was one impulsive but slightly corrective in nature. This is a lot of choppy. Again, this was the correction, and then again an impulse happened. Okay, that's a very important question. Prediction spot, why not in future? So most of the time, suppose if I say someday you buy Nifty now, Nifty is going to go up, and suppose it goes up, the future price also will go up, right? So the levels are always based on spot, because that's what Elliott waves are. Elliott waves are calculated in the spot, and there is a famous person called Precher, Pretcher, who also agreed on this point that prices, Elliott waves should be calculated, or we should be applying Elliott waves on spot only and not future option or something. So I also agree on that, because of many factors like futures have time decay, or I think every FNO thing is dependent on time and things like that. So we cannot incorporate this time factor into this Elliott wave, because Elliott wave has nothing to do with time decay or something. So so that's why there is no FNO prices mentioned in the Nifty. So just you have to follow the spot, and whenever you see that target is met or something, then you have to take according the trades in this one. In this whole move, right, in this whole move, hardly there are many points lost, all the top and bottom. So you should be having the confidence that this can be predicted, but you have to have the realistic expectation that of the Elliott waves. So mention about counts. What are those? Counts, by counts I mean the Elliott wave counts, the wave counts like 1, 2, 3, 4, 5, and all those things which I keep putting in the charts. So these webinars will help the members, as well as sometimes for free for others, to understand the Elliott waves properly. And if you are thinking, oh, I will discuss where Nifty will go tomorrow, for that this exclusive membership is only there, right? There where I will be sharing the counts. So I don't need to repeat the same things here. So that is just for training purpose or for learning purpose, Elliott waves. So I wanted to keep this meeting for 30 minutes because many people requested, they have a lot of work in the weekend. So I wanted to have this summary and short meeting. So if you have any last questions, let me know. Otherwise, I will wind up this meeting, and I will just say that impulse is always followed by correction, except at the end of 5 waves, where you will see a big correction and it may look like a huge impulse. So yeah, I think there are no further questions. So I thank you everyone again for joining, because whoever joins on Saturday and Sunday are truly attached to the stock market like I am, and passionate about it, and I'm sure passion will surely lead to big things in future. So thanks a lot for joining, and I will catch you again um, 10 minutes before. Actually, this link, right, every day, every Saturday, Sunday only, this meeting happens for 8 p.m. only, right? So there is nothing that I'm changing the time again and again. It's 8 p.m. Just you will get the link maybe 5 minutes before, 7 minutes, 2 minutes, 3 minutes. Does it create any problem? I actually came home after a whole day. I was outside, so I just could give it 5 days. But maybe next time I will give little bit earlier. Okay. Thanks a lot, and see you in the next webinar.